Welcome to today's session. Today we are going to look at Bpcl, one of the script from the energy sector, and we are in the quarterly chart. So let's understand how the price movement have been so far. So if you see Bpcl started here, which price was around 27 or 26, and what happened here is that there was a long period of consolidation before price started picking up momentum from 2014. So from 2014 till December 2017 was the complete momentum period for Bpcl. So what you can see that initially the price was somewhere between 116 and then the top was made around 550. Now after the 550 top, price came down, found a support here, which is a demand zone on a quarterly basis, and then price went up. Unfortunately, price was not able to close this 550 level, and again it came down, and it reacted from the same area from where it previously reacted. Now, if you see one change here in the way the price is moving is that uh, the second high which was made here was lesser than the previous high. So the previous high, if we consider, it was 551.55, and here it is 549.00. The similarly, the low which was made on December 2018 was 238.55, but here the low is 252. So what happens here is that the price is shrinking. Similarly, if we see this is the recent peak which had the high of 503, which is again less than the high here, that is 549. And if we consider this as a low, which may not be an exact low, but let's assume that based on this structure as of now, if it is a low, the low is around 357. So what we can see is that price is trying to go up. It is making lower higher lows, and it's also making lower highs on the higher time frame. So this is called contraction. So whenever a similar situation happens, price tend to go down and go and form a triangle kind of pattern, and after the triangle formation is there, depending on the market scenario or the sentiments, the breakout happens. So this is as a very big time frame for us to trade, so we'll not be trading on a quarterly time frame. Now let's understand, considering that the price is going in a zigzag way and trying to consolidate here, uh, let's see if we have any opportunity for us to look for. Now coming to the monthly chart, what we can see is the same pattern, which is more candles now because each are representing each month. Now if you can see, this demand zone was there, but it got violated. Similarly, price again reacted from this area and started forming a upward momentum. Again, it found a seller and then it came down here. Now, if you look into from a structure point of view and on the monthly, we are seeing that demand zones are getting respected. So price came here, went up. Supply zones are also getting respected. Price came here, went down. Again, same thing happened here. Price went up, found supply zone, came down, again found demand zone, going up, again found supply zone, again going down. Now what we can see here is that kind of a structure where lower high, higher lows were getting formed, and similarly higher highs were getting formed. So it was more of a bullish kind of momentum. But recently what we are seeing here is that price has made a zone here, which is drop base drop. So this is one of the area which is going to again stop the price the same way which is happening here. Here the price is not able to break up and coming down, and the same thing we are expecting here. So let us mark this recent area so we can understand how in the lower time frame price is going to behave. So I am taking the body of it, so it should be something like this. This is the wick of it, and this should be the body here. That's how we will be marking the resistance. Now if you look into the demand zone, we have base here, which is a hammer. Then we have one, two, three candles here, which is on the base kind of a structure. And then we have the closing here. So considering this situation, because all of them are similar nature, similar size, what we can do is that we can mark only this portion to have a better understanding of the demand zone. Anyway, we are going to look into the bottom part while we find the trade opportunity. So what we can see here is that price is coming after reacting from this area, and it has reached to a demand zone, which is a reaction from this portion. Although the closing was not decent, but we are talking about a monthly time frame, so we'll have a opportunity to trade here. What we can also see here in the month of December 21, we see the price came here at this bottom portion, touched the body, and then went up. Again, there was some selling pressure, and then price came down. So in current situation, what we can see is that the price is sideways. There's not much of a movement because it is between two, one supply zone and one demand zone, and it is in between here. So that's how we can look for opportunity, like where the price is there. So what we can see is that price was coming up, coming down from the top, found a demand zone and trying to go up. So we expect it to go up to the demand zone, sorry, supply zone. Now looking into the weekly chart, what we can see is that in the marked area, we also have a weekly supply zone, which is drop, base drop. And what we can also see is that this is also creating a hammer here along with another red hammer, which has a price following. Now in this area, what we are seeing that price has found some resistance, but it is not going significantly down for the current week. So which is a live candle here. So what we are going to do here is that we are going to look at the daily time frame and see if we can find any opportunity or not. So I still have room from 388 till 417, which is here. Now if I go to daily, what I can see as a structure here is that the starting point from where price came down, price went up, kind of a gap fill, but it did not do the complete gap fill here. And then again it started stepping down. So it started making lower high, lower low, lower high, lower low, lower high, lower low. And again it started making a lower high, lower low. And I am expecting that another will be lower high and lower low. But interesting thing to see here is that when we plot the RSI, so if we go and add the RSI here, which is the standard setting, now if you look at the RSI, although the trend is going down, the trend of RSI is going up now. So if I have to draw something like this, okay, here the price is stepping down, here the price is going up, or the RSI indicator is showing up. Now, whenever we find a situation something like this, where there are two bottoms, one is below the previous one, but RSI starts making a higher high, which is this bottom here and this bottom portion of RSI. Then we can see the bottom portion of the price and the bottom portion of RSI. We see that price uh, is falling down, but RSI is going up. Now, what we can, why it happens here is that because although the price is stepping down, the respective gain of each of the buyer and seller is higher for the buyer. So that's how RSI need to be interpreted, relative strength of buying and selling or buyer and seller. Now, if we look into this, if this trend line got breached by this candle here, which is on the day of January 5th. Now, if we look into this probabilities, what could happen is that where is currently the price reacted from? So the price reacted from a zone here, which is on a daily. Okay. And if I mark this zone here, which is something like this, So this zone was able to close below these areas. So this area is taken care, and if we look into this, this is also the area taken care. So this makes it a bit powerful area for the zone, for the cells. Now what happened is that price came up, tested this zone, again came down. This area is also being considered as a powerful because it was able to close below this area, which is the previous zone which was formed during 29th of November. Considering this zone is still powerful, the price is reacting from here. Now let's look into the structural point of view. What is happening in the lower time frame, or what is happening as part of the current price action? RSI is giving me a positive indication. It is a positive divergence where we see that price is trying to go up. Now, if after this big red candle, price reached to the monthly demand zone, which is also one of this area, and started going up. While it went up, what it started forming is that it started respecting the demand zone. So if you see, this is one of the area. Just at a lower time frame, you'll find another demand zone here, maybe 15 minutes or 60 minutes. Then what happened is that price came down, again found some buyer here, again went up, found some buyer here. It reacted from this bottom area, again went up and found some buyer here, and then because it has hit this supply zone area, it is coming down. What we can see at a uh, daily time frame is that we have a zone here which is a rally base rally. Now what my expectation is that because this portion is already tested, it is weak for me, so I don't need to consider that. This area, which is a monthly portion, also harnessed a weekly zone. So if you see, this is the weekly zone. This is drop, base, drop. So here the marking will be a bit different. So it will be within the monthly zone, and this is also a powerful area. So now looking into this structure where price was stepping down, like one push down, pull up, pull back, push down, pull back, push down, pull back, then push down. Now I see a distribution of the price. So whenever we see similar structure, which is a distribution of price, we can expect two things to happen. What we can do is that we can wait for price to come to this area, which is bottom area, react from there, create another structure, go up, come down, and again go up. That is one probability. And the second probability is that because we already have this zone, this area, which is we can trade, here we could find some opportunity. And what we can see is that the candle was able to close within this zone, found some buyer, and went up. On the RSI front, what we can see is that RSI, this trend line is still supporting. So if we tomorrow, let's say that we found some trade opportunity here. So what we can do is that we can watch this area at a lower time frame and then see if we have a trade opportunity. Because this area is now tested, this is also tested, and this is the fresh weekly zone which is fresh as of now, and it is still a powerful because it had a continuation of the trend. This is one of the target what we can look for, but the entire weekly area on a daily time frame is not so lucrative. We do not see proper structure. So we have to see whether the price is able to uh, breach through it, go up and continue. If it does, then this is one of the area which is quite decent in terms of the lower area here. So my expectation is that tomorrow we could watch for this area, which is entry level here. So if price starts to go up, we can target this area. So for a better opportunity to have a proper view of it, at a lower time frame, what we can do is that we can go to a time frame something like 60 minutes. Okay, so if you see in 60-minute time frame, this is the daily demand area what we have identified. There are a lot of base candle here, which do not indicate a strong momentum for price to go. But if you see, this was making higher high, lower, higher low, higher high, higher low, higher high, higher low, higher high. But now price is creating kind of a arch kind of structure. So what we can do in this case is that for tomorrow, what we can have is we can target some of this area. So this will be one of the entry point for us. That is a half section. You can see price also reacted from here. So we can target some of this area and we can have a stop loss a bit wider around 3 rupees and have a target of 1 is to 2.5. So this will be something like this. So tomorrow if price comes down to this level, we can trade this portion because this will be the bottom area of daily. So view the result within the same day. If not the same day, it could be on the next day. We can also see the overall structure of RSI. RSI is trying to go up here after hitting this portion. So it may also be possible that we do not get an opportunity where the price comes here. So what we have to do is that we have to look for long opportunity somewhere here. So if we look for this long opportunity, our target will be this area, which will be around 397, and our stop loss should be a bit lower from this week. So why we are saying we need to trade like this? Okay, here we do not have a proper risk to reward ratio. So what we can do, we can have this target somewhere here. So what I'm expecting here is that price to either open gap up or give us opportunity above 390 and have a stop loss at 386 and then target of 398. So one thing to understand is that this is a 60-minute time frame. So it is a hourly chart. What happens in those cases when you're trading at a smaller time frame, if your entry is not proper or if there is a significant price fluctuation, that may impact your entry and stop loss. So the recommendation here is that if we see some good momentum candle during this area, during this formation, if the price opens gap up, we do not trade. If price open gap down, we do not trade unless it reaches this area. If let's say that price opens in this level and then starts going up, that time we take the trade. So we'll not take the trade if price opens up, then starts to come down. So that will not be the entry area. So for those cases where price opens up and then starts to come down, we will wait for a bottom formation, something like this, where price halted, went up, going sideways, and then going up. So mostly the expectation here is that price will open within this range, then starts to go up. So if starts to go up, our whenever the price reaches this level, we should move our cost to cost. We should become break even because we are trading 60-minute time frame. And once we get the momentum, we should target one of this area. Now, the important thing to look here is that sometime what happens is that price goes in a sideway. So if it goes in a sideway till 1 o'clock, then we should avoid the long position. So whatever the position we have as on the day, we should be getting rid of it. So this is the analysis what we have for BPCL. The expectation is that it will give a good long opportunity considering it has hit a daily demand zone, and we should be having some quick wins here. In case it does not work this way, what we can do is that we can plan some of this area, which is bottom of this portion, and better than this area, if we can wait for this wick uh, kind of structure, which is having a hammer, this is one of the good area. where we can wait for price to come down. In case price do not come down, this is the plan what we can trade. So let me know your thought about this analysis in the comment section. And in case you need any stocks which we should be reviewing, feel free to comment those stocks. We'll try to take them as part of the review. Thank you very much. Have a good day.